Hey everybody, hope you're having a great day so far. My name is Zach Pasquarello. I am a bookkeeper and a certified QuickBooks Online Pro Advisor. So I own my own company, Harrisburg Bookkeeping, located in Pennsylvania in the South Central region. And I'm here to help you guys out with some of your QuickBooks. So if you're a business owner, you're probably pretty familiar with QuickBooks at this point. And if you're just now starting out, you're probably doing it all on your own. If you've been in business for a while, you might have a bookkeeper or an accountant or an entire department handling this stuff for you. Either way, I'm here to show you how to do some things. And today I want to talk specifically about expenses and bills. So this is just a sample company on the QuickBooks software for QuickBooks Online. So if you go in the top left corner of your QuickBooks, the plus sign, the new button over here, you've got a column for customers, you have a column for vendors, and then you have some other stuff over here. Specifically, vendors, those are people you pay. Customers, those are people that pay you. And then you have here expense and you have bill. So the big difference here, a bill would be like an accounts payable, something that you have not paid yet but plan on paying in the future, whether that be 5 days, 15, 30, 60, 90 days in the future, however your payment plans are set up. And typically an expense would be something you already purchased, whether that be with cash, check, debit card, credit card, however you bought it. If it was for your business, if it was a necessary expense and an ordinary expense for your business, it can be considered a business expense. So if you want to report an expense in your QuickBooks, all you have to do is press the plus sign up here, hit the expense, a screen will pop up. A couple options here. The payee, who did you pay? So maybe you went to Walmart, maybe you went literally anywhere. Home Depot, Lowe's, Walmart, Amazon, whoever you're paying here. From what account did you pay them? So if you use your debit card, probably came out of your checking account. If you used your credit card, maybe you used your American Express, Visa, MasterCard, whatever credit card you used, this will be the account that QuickBooks pulls the money out of. And this is all virtually happening in your QuickBooks. So you're not physically moving any money in your bank accounts by reporting this expense. You're just virtually reporting it on your general ledger. So we'll say you use your debit card, checking account, did the transaction April 19th, yesterday. Don't get so caught up on the payment method here. Not terribly important, but use your checking account. So we'll say use your Visa debit card. Category, this is important. Basically, what did you buy? So this is your expenses first here, and all these expenses will be part of your chart of accounts. So every single expense here will be on your chart of accounts. And you can set this up. You can customize this however you want. This is just a sample company. So maintenance and repair, meals and entertainment, rent, supplies, travel, utilities, whatever you bought, however you want to categorize it. Probably one of the most common would be something like job supplies, job expenses. So we'll say job materials, and this here is a sub-account of job expenses. So job materials. For the description here, this is just for your reference. What did you buy? Let's say you have a landscaping company and you bought a shovel for John Smith project 4/19/2021. How much for the shovel? Say the shovel is $50. Then if you want here, if you are tracking your customers in QuickBooks, you can enter in here John Smith, and then it'll allocate this expense to John Smith. That way you can track how much money you've spent on John Smith's project. And in the description here, I typically just copy and paste the description into the memo. You can enter in whatever details you want on the memo. So you see here the total, $50, and this would be considered a debit to the job materials and a credit to your checking account. So if you're doing basic double entry accounting for your journal entry, debit job materials, credit checking account. So you are increasing your job expenses and you are decreasing the amount of money you have in your checking account by $50. Save and close. So that's an expense. So that's something you already bought. Now, let's say you have a 1099 contractor and he does some work for you on John Smith's project. So this, and you pay your contractors every 2 weeks. So yesterday, one of your contractors who you can have up here, you can have your contractors. The vendor is someone you paid or someone you plan to pay. And then the terms. So due on receipt, net 10, net 15, net 30, net 60. That net whatever just means the bill will be due in 10 days, 15 days, 30 days, or 60 days. So if it's a 1099 contractor, you pay that person every 2 weeks, then you would do net 15. You're creating the bill for April 19th, which was yesterday, and it automatically determines the due date here. So 15 days from April 19th is May 4th. So your 1099 contractor did some work for you yesterday. So similar here, we have job expense, cost of labor. Description, Billy Bob, 8 hours at $20 an hour. Amount $160, and then once again it'll be for the John Smith customer, so you can just enter in the customer there if you want to keep track of it that way. So this will create an accounts payable for you to go into Billy Bob for the vendor, and then it'll be due in 15 days. So if you want to create the vendor, and for some reason this sample company is not letting me create this vendor, but with your QuickBooks subscription you will be able to create the vendor and save it. And then you can also add details for all of your vendors. So right here, if it's a 1099 contractor, what company, what's the display name, the address of that person or that company, email address, phone number, how much do you pay that person. And then this is kind of cool, the default expense account. So if it is a 1099 contractor, you can set the default to always be cost of labor. And then if you're tracking payments for 1099 contractors, you can click that button there, and then QuickBooks enables you to run a report of all of your 1099 contractors. That way, at the end of the year, when it comes time to file your 1099s, you can run that report, and you'll see you paid Billy Bob X amount of dollars during the year. It just makes filing your 1099s that much more simple. Let's see if it'll let us. Billy Bob, save. Okay, so the sample company is not letting me do it. So that's the difference between a bill and an expense. An expense, something you purchased in the past and you just want to virtually report it in your QuickBooks so it shows up on your profit and loss statement, your general ledger. And then a bill is something you want to report into QuickBooks. That way you can keep track of who you owe money to, whether it be companies for supplies or contractors for labor. Whoever you're paying, however you're paying them, QuickBooks enables you to keep track of it all. And not only will it help you pay your bills on time, but it'll also streamline the whole process of creating your general ledger and then compiling your profit and loss on a monthly basis for your own personal budgeting and planning, and then also at the end of the year for your taxes. So that's a little explanation of vendors and how to report those transactions. If you all want me to talk about anything specifically, please feel free to let me know. Send me a message, send me an email. Once again, my name is Zach, and I am a bookkeeper and a QuickBooks Online Pro Advisor at Harrisburg Bookkeeping. I hope this was helpful. Let me know, and I will talk to you all again. Have a great day.